Hello everyone, you are watching Sahab Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Sahab Academy. Now let's go to the video.
Hi everyone, welcome back to Sahab Academy. Now today in this video we're going to start this new chapter of cost accounting. As you can see over here, process costing. Now this is a very interesting chapter really if you understand the logic and the concept behind this. Yeah, and you will also not feel that this chapter is quite lengthy. Yeah, I'm talking about the CA Inter students. Right, so first let's talk about what are the different types of questions that can be asked in the exams. Yeah, and how you have to study this chapter. So see here, for the BCom exams you will have what? Simple process account. It could be with stock account or without stock account, and of course you will have normal loss account and abnormal loss or gain account. Now if you don't know what these things are, don't worry, we'll see all that. I'm just giving you here an overview. Okay, so for the BCom papers you will have only the basic process account. All right, but for the CA Inter exams you will have three different types of question. The basic one, yeah, yes, and then work in progress, yes, where the equivalent units concept is there. Yeah, you have to prepare a statement of equivalent units, statement of cost per unit, statement of cost apportionment, and also of course process account, right? And then there's one more type of problem, one more type of question, that is inter-process profit. This is very important from the exam point of view. Okay, so there are three different types of question that could be asked in your CA Inter exams. Fine. And for the BCom exams only this. Fine. Yes, so let's start this chapter. Let's try to understand what is process costing and everything, and let's understand the format, the logic, the concept and everything. Yeah, let's start. Now first let's understand the meaning of the process costing. See here, process costing is a method of costing used in industries where the material has to pass through two or more processes for being converted into a final product. What does it mean actually? See, it's very simple. Process costing is a method of costing. It's a technique of costing that is used in industries where the raw material has to pass through various stages to become a finished good, to become a final product. Is that clear? Yes. So at each of these stages, what would be happening? Some work will be happening on the raw material. Yeah, you have put in the raw material, some work will be happening over here, and then whatever output comes out of that process, out of that stage, yeah, it will be the input for the another process. Then again some work will be done over here, then again output, and it will be input for the other process, and then here again some work will be done, and then at last what you will have? You will have a final product. Yes, so whatever the work that has been done at each of these stages, of course there is a cost for that, isn't it? Yes, so at each of these stages some costs are being incurred. So each of these stages are what? They are cost centers. They are cost centers. And here in this method of costing, what we do is we charge the cost to the processes and we prepare the processes account. All right, so what are the costs we are talking about? See here, cost of each process comprises of the material cost, the labor cost, the wages you pay for the workers, and then the direct expenses such as depreciation on the plant and machinery, and then repairs, maintenance, insurance of that, and all those things. And then you also have production overhead, rent, lighting expenses, electricity, all these indirect expenses. All these things will be what? They will be happening at each of these stages. Yes, so we have to properly calculate what is the cost of each processes. Yes, so the organization is interested in finding out the cost of each processes. Yeah, so what they do is a separate account for each process is opened. All right, and expenditure pertaining to a process is charged to that process account. Is that clear? So for each processes a process account will be opened. Yeah, so how will you prepare this process account and all? We will discuss that in the format. Yeah, but don't worry. So first let's discuss a bit more about this process costing. Do you understand what I'm talking about over here? An industry, such as oil refineries, rubber factory, plant factory, chemical factory. So all these things, the product will be homogeneous, the final product. Yeah, so in these type of factories where the work will be done in various stages, and at each of these stages what will be happening? The cost will be being incurred. For example, if you talk about coffee production, coffee factory, then what would happen? First they will do the coffee plantations, then they will do harvesting of beans, and then milling. Yes, cleaning the beans and polishing them and all that. Yes, and then roasting the beans and then grinding the beans. Then you have that powder or whatever that is. Yeah, and you will brew the coffee. Yes, so this is the process. At each of these processes, at each of these stages, what will happen? Some cost will be incurred, and we have to account that cost properly because the organization is interested. Yeah, the management is interested in finding out the cost of each of those processes. Yeah, so we have to prepare the processes account. So we have to understand properly how to prepare this process account and what all things can happen. Yeah, there could be normal loss, abnormal loss. So these things we have to understand properly. Is that clear? So we'll discuss all that now. Yeah, let's go to the format of process account and let's understand what that is. Now here we have the format of process account. Let's understand how to prepare this. Now the structure, as you can see, is very simple. We have particulars columns, and then 3 columns we have quantity, rate, amount, quantity, rate, amount. Yes, that's the structure. Now how do we prepare the process account? See, for that you need to have a basic idea. Yeah, the basic idea is that whatever you have put into the process, it will come on the debit side, and whatever that has gone out of the process, it will come on the credit side. Is that clear? Whatever that has gone into the process, whatever that has gone out of the process. Simple. Now see here on the debit side, first we have here to material. What is this? The material which you have put into the process, it will come over here on the debit side. To material, you have to take the quantity of that, rate of that, multiply those two together, you will get the total amount. Is that clear? Yes. Then what all expenses you have incurred for the process, that will also come on the debit side. To labor, to overheads, to other expenses, fine. And there will not be any quantity or rate of that. So the amount, whatever that is given in the question, only that you will have to take. Is that clear? Yes. Then what is this? To abnormal gain, to profit and sale, in the bracket sold immediately. What is this? We'll come to this in a minute. Yeah, let's go to the credit side first. Now if you see on the credit side here, we have by normal loss, by abnormal loss. Now what is this? Yeah, and why is it being taken on the credit side? Let's understand that. See here, let's take this example at the below. See here, let's say you have put in 100 units of materials. Yeah, input is 100 units, and then the normal loss is 5%. What does it mean? Normal loss is 5%. It means that in the normal course of production, it is expected by the management that 5% of our input will be lost no matter what. Will be lost no matter what. So how are they estimating this 5%? See, it is expected in the beginning itself, and it is estimated on the basis of past history. Yeah, based on the previous years of production, whatever the production they have done in the past, based on that they're expecting that 5% will be lost. Okay, so what's our expected output? If you have put in 100 units, see here, if we have put in 100 units and then we are expecting that 5% of this will be lost no matter what, so 5% of 100 is what? 5. So minus 5. So we are expecting that our output would be what? 95. Yeah, our output would be 95. Yes, but then what actually happens? Yeah, let's say case 1, actually we have 92 units. Yeah, 92 units. We expected 95, but we have 92 units at last of the process. So what does it mean? It means that we have lost additional 3 units, isn't it? We have 3 units extra loss. So that extra loss above the normal loss is called as abnormal loss. Yeah, due to inefficiency of the workers, carelessness of workers, what can happen? Some mistakes can happen, and due to that mistakes, what will happen? Some units will be extra loss, and that loss is called as abnormal loss. Is that clear? Yes. Then the case 2 is, see here, 95. We are expecting 95, right? But let's say what happened was we had 97 units. At the end of the process, we had 97 output. So it means 2 units extra we have, isn't it? We are expected to have 95, but actually what is happening, due to some reason, maybe efficiency of workers, maybe there is upgrade of technology or something. Yeah, better use of technology. So due to that, what is happening? 2 units extra gain is happening. Yeah, our normal loss is reduced. Normal loss is not 5% here in this case. Yeah, we are gaining 2 units, so that gain is called as abnormal gain. Yeah, and we have to reflect that in the process account. Yes, the material which you have put in, and then if there is normal loss, it will be taken over here on the estimated basis, the quantity of that, and then what will happen? This normal loss, it will be sold in the scrap. Okay, so the scrap rate will be given to you, and you will sell it over here. The quantity you will take, and then the rate you will take, whatever the scrap rate is, and then you will multiply those two together and you will get the amount. Sometime what will happen? Sometime it will not be sold for scrap. Yeah, the scrap rate will be not be given. If it is not given, then what you have to do? You just have to take the rate nil and the amount also nil. Okay, like that can also happen. And then the abnormal loss will also come over here. By abnormal loss, the quantity you have to take, and the abnormal loss will be valued at cost price, not at scrap. Yeah, later onwards it will be sold at scrap, of course, but here you have to value that at cost price. Keep that in mind. Okay, normal loss is valued at scrap, yeah, and then the abnormal loss is valued at cost price. Is that clear? Yes. Then what? Then abnormal gain. The abnormal gain will come over here on the debit side. Okay, so normal loss and abnormal loss is coming on the credit side because you're losing the materials. Yeah, you're losing it. Yeah, it's going out of the process. That's why it's coming over here. That's the logic. And here what is happening? Reverse is happening. We are gaining here. So we are gaining means it's increasing in the process. Yeah, so it's going into the process. Yeah, like that logic you can have, and it will come over here to abnormal gain, and this will also be valued at cost price. It will also be valued at cost price. Yeah, we'll see that how to calculate that cost per unit, don't worry. Yes, then what do we have? Then see, on the credit side here we have buy bank in brackets sold immediately. What is this? See, sometime what can happen at the end of the process, whatever output you get, yeah, whatever output you get from the process, whatever that comes out of the process, some of that can be sold immediately directly into the market. Yeah, if it is sold directly into the market, then you have to take over here buy bank in brackets sold immediately. You have to take the quantity which you have sold, and then there is one important adjustment over here. See here properly, let's understand that. See properly, see here, some quantity sold immediately. Yeah, there are two cases over here. If the question says process is a profit center, if the question says that, then what you have to do, you have to take the sales value, whatever the price at which those quantities are sold, that rate you have to take over here, and then whatever quantity you sold, you have to multiply those two together and take the amount. You have to take the selling value, sales value. And if you're taking the sales value over here, then what is happening? See, here you have all the cost, and here what is happening? The sales value is coming. If sales value is coming over here, then there will be a profit in that. Yeah, and your process account will not tally. Yeah, so what you have to do, you have to remove that profit by making an equal, what do you say, debit over here. Yeah, whatever profit is there in that, yeah, let's say you have sold at 120 for example, so 120 you will be taking over here, and then that 20 profit you will take it over here to profit on sale, sold immediately 20 you will take it over here. You will remove the profit so that your process account can be tallied. Is that clear? You have to take the sales value in process account and record profit on debit side of process account. Yeah, that's what you have to do when you sell immediately and the process is a profit center. The process is a profit center. And if the question says specifically process is not a profit center, or the question is silent, then you have to do this. What is this? See, take just cost in process account. Whatever the cost per unit you will be calculating, at that you have to value that. You will take whatever quantity you have sold, take cost per unit, multiply those two together, then you will take the cost over 100. Is that clear? Just the 100. So you'll not be having two profit on sale over here. The profit of that, whatever the selling value would be, the profit of that would be directly reflected in the costing profit and loss. Okay, the profit will be reflected here in this case directly in the costing profit and loss. Okay, not here. Is that clear? Easy. So this is what you have to do. If the process is a profit center, take the sales value and then take the profit over here. And if the process is not profit center, or the question is silent regarding this, yeah, whether the profit is or not a profit center, you have to just take the cost over here and just go ahead. Yeah, fine. So that's regarding sold immediately, directly selling the output. And then what we have, and then what will happen, the obvious thing is whatever output that has come out of this process one, it will go to the next process, isn't it? If there is any next process, it will go to that by process 2 account. Yeah, you have to take the quantity, the rate and the amount. Is that clear? Now how will you value this? At what price you will take over here the rate? The rate would be the cost per unit. Yeah, you have to calculate that cost per unit. Always remember, okay, see, abnormal loss, it will be valued at cost per unit. This thing will also be valued at cost per unit. Yeah, and then this abnormal gain also, this will also be valued at cost per unit. All star, abnormal gain star, process 2 account star, finished stock also, yeah, cost per unit. Fine, all stars. So all of these are what? They will be valued at cost per unit. So we have to understand how to calculate that. So did you understand this? Yeah, so this is what you have to do. Okay, now let's understand the valuation thing. See here, now in process account, what do we have? We have loss, gain and output, isn't it? So in loss we have normal loss and abnormal loss. Now in normal loss, what will happen? It will be valued at scrap, isn't it? Whatever the rate that will be given in the question, you have to take that over here. Yeah, if it is sold for 5 rupees, so what you will have to do, 50 quantity has been lost, just for an example, 50 into 5 you have to take, and then take the total amount. Yeah, if the scrap value is not given over here, then what you will do, you will take it as nil. Yeah, dash dash, you will just take the quantity. Is that clear? Yes. So that's regarding the normal loss. Then we have also abnormal loss, and then in gain we have abnormal gain, and then in output what do we have? Transfer to next process. Yeah, transfer to next process, and we also have abnormal gain, right? So this is the abnormal gain over here. Yeah, abnormal gain. And here in output, what else I said? I said that it also can be sold directly to the market. Yeah, if it is sold immediately, then you have to see whether the process is a profit center or not, and then you have to do it accordingly. You all know that, right? So now, what is this star? Yeah, how are we going to value these items? Abnormal loss, abnormal gain, and then output also, this finished stock or process 2, whatever that is, output. Yeah, how are we going to value that? I told you it will be valued at cost price, cost per unit. Yeah, but how will you calculate cost per unit? See, it's very simple. This is the formula you have to use to calculate the cost per unit. See, the formula is very simple. All you have to do is, see here, take the total debit. Yeah, whatever debit you will have, see, total debit in process account, you have to take the total debit, whatever that is there. Yeah, whatever debit you have, all the debit you have to take from the process account minus normal loss scrap value. Yeah, let's say the normal loss is 50 into 5. Yeah, so 50 into 5, that's 250. So here we will have 250. So that 250 you have to subtract total debit in process account minus normal loss scrap value divided by the total units input in process. Let's say you have put in 1000 units. How much? 1000 units. So you have put in 1000 units. Yeah, so that 1000 will come over here, total units in the process account minus the normal loss units, whatever you have lost normally here, 50 quantity, right? Just for an example, minus 50, you will do 950. So you will divide that by 950. Is that clear? The total debit in process account minus the normal scrap value, yeah, divided by total units in process account minus the normal loss unit. If you do this, then you will get cost per unit, and this cost per unit I also call it as star. So these things will be valued at star, cost per unit, CPU, abnormal loss, abnormal gain, and also the output. Is that clear? And this sold immediately will also be valued at cost per unit if the process is not a profit center. Is that clear? Yes. So this is the format of process account. Now let's understand properly the format of normal loss, abnormal loss account. Yeah, let's do that. Now here we have the formats of normal loss account, abnormal loss account, and abnormal gain account. Let's understand how to prepare this. See, it's very simple. All you have to do is cross postings and you will have these accounts ready within minutes. Fine. So first let's focus on normal loss account. How are you going to prepare the normal loss account? See, first thing that you have to do is see the processes account. Yeah, what normal loss do you have in process account? That's the same thing. You're going to cross post it here on the debit side of normal loss account. Yeah, so for example, let's say there were two processes account, process 1, process 2, and let's say in the process 1 we had normal loss and abnormal loss, and in the second process we had normal loss and abnormal gain. Okay, so when there is abnormal gain, then normal loss account becomes a bit tricky, but don't worry, it's very simple. I will teach you exactly how to do that. Yeah, so in the first process there was by normal loss and by abnormal loss. So what you're gonna do, you are just gonna take normal loss and cross post it over here, the same figures whatever you have in the process account, and you know that these are on estimated basis, isn't it? Normal loss is on estimated basis always. Let's take this example. See here, we estimated that 5% would be lost no matter what, isn't it? So it is expected in the beginning itself. So 5 quantity will be lost no matter what. So that's why we have taken 5 quantity over here. Just for an example, scrap rate, scrap value. Yes, and this is what you are copying exactly over here, cross posting over here, process 1. Okay, and then there is abnormal loss in process 1. If there is abnormal loss, what does it mean? It means that there is more loss than the normal loss. Extra loss is there, isn't it? 3 units extra loss. We expected that we will have 95 output, but we have 92 output. That means we have lost 8 quantity. 5 is normal loss, yeah, which will be sold in scrap, and this abnormal loss is there of 3 quantity, isn't it? So whenever there is abnormal loss, all the 5 quantity, the whole normal loss, the whole estimated normal loss will be sold in scrap, So you are going to sell that over here by bank account. Yeah, all the 5 quantity will be sold. Yeah, you took here 5 quantity on estimated basis from the process account, and all the 5 quantity will be sold. Is that clear? At the scrap rate, at the scrap value. Is that clear? Yes. Then in process 2, what did I tell you? In process 2, I told you that there was abnormal gain. Just for an example, if there is abnormal gain, what happens? You estimated the same example. Let's take the same example. You estimated that 5% normal loss would be there, 5 quantity. Yeah. So expected output was 95, but the actual output was 97. Yeah. So actual output is 97 means what? You haven't lost 5 quantity. Yes, you had estimated 5, and in the second process also you have taken 5 quantity over here on estimated basis. Yeah, but actually you have lost how many? Only 3 quantity. Yeah, not 5 quantity. you have 2 abnormal gain, 2 units abnormal gain. So what you're going to do, see here, in the second process, in the process 2 account, you are going to take 5 quantity here on estimated basis and into the scrap rate, into the scrap value. But in the normal loss account, yeah, you will cross post this 5 quantity, the same thing, process 2. But can you sell 5 quantity? This is on estimated basis. You cannot sell 5 quantity. Why can't I sell 5 quantity? Because you haven't lost 5 quantity. 97 is your good output. Yeah, only how much? Only 3 units have been lost, isn't it? You expected you will have 95, you have 97, so that means 3 quantity you have lost. So these 3 quantity of normal loss only will be sold off in scrap. So here you can only take 3 quantity, normal loss quantity 5 which you expected, minus the abnormal gain quantity, this 2, so only 3 quantity can be sold. Is that clear? So 3 quantity into scrap rate, you will get the scrap value. Is that clear? So whenever there is abnormal gain, what you have to do, you cannot sell off the entire normal loss quantity because you haven't lost that entire normal loss quantity. Whatever normal loss percentage is there, that's on estimated basis. Yeah, but the actual loss would be what? The actual loss 5 minus 2. Yeah, 5 normal loss you expected, 5 quantity minus the abnormal gain quantity you have to take, and only 3 quantity you have lost, so that would be sold. Yeah, so that's what you have to do. So if you do that, then what will happen? Then there will be a balance on the credit side of normal loss account, and that would go to abnormal gain account, isn't it? Because of abnormal gain, what is happening over here? You cannot sell off the entire, entire normal loss quantity. The normal loss quantity is 5, yeah, estimated one you have taken over here on the debit side, but on the credit side you can sell off only the actual loss, only 3 quantity. So there will be some balance over here, so that balance would be reflected in the abnormal gain account, and then only the normal loss account will be tallied. Is that clear? Yes. Now let's see how to prepare the abnormal gain account. The same thing again we have to do cross posting from the process account, and in process 2, as we said, we have abnormal gain. Yes, so that same figures will be picked up from the process 2 account and will be cross posted on the opposite side of the abnormal gain account. By process 2, the same figures you have to take, quantity, rate, amount. Is that clear? Yes. And then in normal loss account, we have here as a balancing figure by abnormal gain, isn't it? Because here we have taken the normal loss from the process 2 as estimated basis, on estimated basis 5 quantity, but actually we were able to sell only 3 quantity, the actual normal loss, and that happened because of what? Because of abnormal gain. So that's the balancing figure here we have, and this has to be reflected in the abnormal gain account on the opposite side. Here it's on credit, here it will be on debit side to normal loss. Is that clear? Yes. And if there is any balancing figure in abnormal gain account, then it has to hit costing profit and loss. Yes. Okay. So that's regarding abnormal gain account, and then we have abnormal loss account. Now in abnormal loss account, what you have to do, see here again, back to the process account. In process 1, we had abnormal loss here on the credit side by abnormal loss. Now abnormal loss is valued at cost price. You all know that, right? All these 3 things, abnormal loss, abnormal gain, transfer to next process, they are valued at cost price, cost per unit, at star, isn't it? At star. So what we have to do, we have to take that abnormal loss, the same thing, yeah, whatever you have over here on the debit side of abnormal loss account to process, yeah, cross posting, and then what will happen is this abnormal loss will also be sold in scrap. Okay, it will also be sold in scrap, same like normal loss. If the scrap rate is given of normal loss, then what you have to do in abnormal loss account also, that same loss will be sold in scrap, and you have to take that same rate. Is that clear? Unless otherwise mentioned. If they give you different rates, then you have to take that different rate. It's a loss, right? We have, that's a faulty unit now. So those faulty, that abnormal loss has to be sold in scrap. It will come over here by bank account. But think properly. It is at cost, yeah, it is coming from the process account at cost, isn't it? Because it is valued at star, it is valued at cost per unit, yeah. So what's going to happen? There will be a balancing figure in the abnormal loss account, isn't it? It is coming at cost, you are selling it at scrap, isn't it? You are, let's say the cost per unit is rupees 10, it is coming at rupees 10, you are selling it at, let's say 2 rupees, yeah, at scrap, and then the remaining 8 rupees, the balancing figure will go to costing profit and loss. That's your loss, isn't it? That's a cost coming in, and then you are selling it off, recovery of some loss, and then whatever the remaining loss is there, that has to go to debit side of costing profit and loss. Here it will be on credit side, and in costing profit and loss it will go on the debit side. Is that clear? Yes. See here, realizable value of the loss will be same for normal loss as well as abnormal loss unless different rates are given. Okay, in the question, if there is normal loss, rates are given, scrap rate, the same scrap rate you have to use unless and until the different rates are given. Okay, is that clear? Yes. And what is this? What I have done over here, this is the same thing I have told. See here, if in process abnormal gain quantity is there, if abnormal gain is there in second process, as we saw here, just took an example. So what will happen? We cannot sell the entire estimated normal loss. Yeah, what we will be able to sell, we can only sell normal loss quantity minus abnormal gain quantity, isn't it? 5 was the estimated normal loss in that example, and we lost how many? We lost only 3 units. Yeah, how did we find that 3 units? Because there was abnormal gain of 2 quantity. So 5 minus 2 was what? 3. So that was our what? Actual loss, and this actual loss quantity can only be sold as normal loss in scrap value. Is that clear? Easy. So this is what, always, you know, pay attention to this carefully. Okay, right? So this is it. Yeah, this was the format of normal loss, and abnormal gain account, and then you also understood the process account format. Yeah, so this was just process 1. If it is process 2 and all the same thing, you have to repeat that. This output again will be the input for there. Yeah, and then if it is the last process, then it will be finished stock. Yeah, so this is what you have to do. Now in the next problem, we are going to solve one study material illustration properly and understand how to do this practically. Is that clear? Yes. So yeah, this is it. Yeah, see you in the next video. Bye.